What's going on, everybody? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today, I'm bringing you a trading strategy video. And guys, I've been grinding. I've been putting in work every day for the past 2 weeks, trying to trade on new strategies, risking my own money. Some of these strategies, I didn't execute very well. I lost some money. I made some money, but there was one particular strategy that was just head and shoulders above the rest, and that's the one I'm going to show you today. So stay tuned. I've got a real banger here for you. All right, everybody, we know the drill. I'm not a financial advisor. This is not financial advice. However, I share this technical analysis so that you use it as you see fit. But remember, you manage your own money and you manage your own risk. If you like this video, please hit the like button, subscribe to the channel, all that good stuff. It all helps me very much. With that being said, I do want to share this really quickly because I know I don't have a very large audience, but I'm trying to grow that. I'm working very hard to grow that, and I know that there's been a lot of people who watch my videos and share them. But I want to ask you guys one more time to please share these videos with as many people as possible, because 4 or 5 months ago, you could have shared how to have a bear market plan. You need to have a bear market plan, because 5 months ago I was calling that the bear market was coming. There was going to be a bear market coming. 4 months ago, the NASDAQ and S&P 500 crash has started. How badly will this affect crypto? Who didn't see this dump coming? Bitcoin going below 20K, and I'll show you how it can happen. Raven going below 5 cents. And obviously that went all the way. It's going to push below 2 cents, potentially within the next couple hours or maybe days. There were a lot of people 4 to 5 months ago who were refusing to say bear market, who were refusing to say recession, who were refusing to say this is a good likely opportunity for a big downturn in the market. People were refusing to see that because viewership and people watching these videos, I get it. I know people don't like to watch videos when the market is going down and people are losing their money. They don't want to watch videos about it. But I'm going to show you how to short the market. I'm going to show you how to long the market, how to make money either way. And that's what this video is all about today. It's going to be how to make money either way. Today's trade was a trade. I made this trade today, and I will show you the whole setup. And I made a ton of money on this trade. I made a 90% profit in like an hour and a half. But regardless, it was a very short time period to make a lot of money with this trading strategy. So we're going to start on the 30-minute time frame. Now this is going to be a multi-time frame analysis where you start on one time frame, you go to another to hit your trade target. And I'll show you exactly what I mean, and we'll show you exactly what you need. You need RSI, you need Relative Strength Index, and you need to know how to use it to find both hidden bullish and hidden bearish divergences. And since this is going to be a short trade here, today's trade was a short, I'm going to show you how to find a hidden bearish divergence. You're going to need your RSI, you're going to need to have your 3 smooth moving averages, and the 3 smooth moving averages comes as one indicator. You can use fractals if you want. You can use engulfing candles if you want. These indicators I use sometimes just to give myself a good ID, a good identification on things. You see these little red arrows and green arrows, those are engulfing candles. They can help you time entries, but those are optional. They aren't needed. The other thing you need to know is how to use the Fibonacci retracement tool. So what we're going to do is we're going to do a Fibonacci retracement. We're going to go from this peak at the 21 period moving average down to where it bottomed. And we're going to see what the retrace was. The retrace for this strategy to work, the retrace has to come back at least past the 382, the 38.2% retrace. Ideally, the 50% is where you want to target, but you don't always get it. As long as you're above the 382, you're fine. You have to break above the 21 period moving average. Again, if you break above the 50, you want it to come back below the 50 very quickly. But you can break above the 21 and you can break the 50. You have to break the 21. You cannot even take this trade or look at this as a trading possibility if you don't break above the 21. You need a hidden bearish divergence for this. And I'll draw these lines out. You see this peak high. This was our previous peak high, and this is our new peak high. Obviously, this is a high, this is a lower high. And you will see that our RSI has a high and then a higher high. So you want from a lower to a higher RSI, but you want from a higher for a lower price. This is a hidden divergence. You see the lines are going in opposite directions. The RSI is going up, the price is going down. This is a divergence. You need to have this hidden bearish divergence to take a short, and conversely, if you're going long, you need to have a hidden bullish divergence. This tells you that even though the price is coming up and it's retracing, that because it took that much strength, it took that much higher of an RSI to get that price there, and it couldn't even get back up to that price, that the move is going to be weak and that the bears are still in charge. The price is going to come back down. So right now we have everything that we need on a 30-minute time period. On a 30-minute time frame, we have everything checked. We have a retrace back at least at 382. We have a hidden bearish divergence on the retrace. We broke the 21 period moving average on the retrace. Now we're going to go into our 5-minute time period to find our entry. Now you can find your entry with any type of candlestick pattern that you like to use. You can find a big engulfing bearish candle. You can find a shooting star or evening star pattern. Whatever it is that you want to use for your trigger, that is the only thing that's optional. That's the only thing that's not set in stone. So what I'm going to say is I was watching this on, this is my trade here, and I'll give you the exact moment that I took the trade. I was looking at this price being above the 200. I wanted it to break below the 200. I saw this evening star. I tried to get back above and it rejected the 200 moving average. So when that rejection happened, that's when I wanted to take that trade. I knew with multiple indicators that that price was going to come back down. Now what I'm going to do here is I'm going to take a stop loss position slightly above this previous peak and give myself a little bit of wiggle room. So this would be about a 1.73, so 1.75% stop loss potential. And my take profit area is going to be right here, the bottom of the Fibonacci retrace. So that's where I want to take my profit at, the very bottom, the very lowest touch of this Fibonacci retrace. And then once you've got your position, once you've taken your position, you can move it back to the, you can stay on the 5-minute candles, you can move it back to the 30, whatever the case is. But look, that is a 3.76 to 1 reward to risk ratio. Now, some people don't like trading with that big of a gap. If you want to go and take half your value out at 2 to 1, you get to 2 to 1, you say, cool, I'm going to cut half, bring my stop loss down to break even, and then let the other half ride. Absolutely fine. You can absolutely do that, and what that will typically do is it will increase your win rate. You might not keep the same profit rate or as high of a profit, but it will definitely increase your win rate if you say, once I get to 2 to 1, I'm cutting out half and I'm going to break even. That way you're guaranteed profit, and that is absolutely fine. A lot of people do that. Or you can say, I'm going to let this ride till it gets to my target. It's either going to make it or it's not. You know, you can take half, you can take 3/4, whatever it is, and let some ride. But the target is always going to be the bottom of the Fibonacci level. So move this back on a 30-minute candle. And that went pretty smoothly. That didn't take long at all. And that was a massive target, and a massive win on like 15x leverage. I think I played that on 15x leverage. So 6.5% on 15 times leverage was like a 95, 97% profit. But guys, this happened over and over again over the past couple of nights while the market was coming down. And Bitcoin here, you can see Bitcoin did very similarly. You had it here, you touched the 21. So you want to look at your peaks from touching the 21 down, touch the 21 down. That one didn't touch, so it's going to come back to here. So this is going to be your Fibonacci on Bitcoin. And this one I'm doing it on the fly because I didn't take this trade. I'm just looking at it now, doing it on the fly. Broke the 21, went above the 50% retrace. Do we have a hidden bearish? Yes, we do have a hidden bearish divergence. So then we can take a look at the 5-minute time frame. And where do we enter? I'm going to be honest with you. You can enter anywhere, but what I really like is, again, the doji, the doji pattern here on the 200 period moving average. Either this doji and then breakdown, or this doji and breakdown. I like to trade dojis near the top or near the bottom. It typically symbolizes a flip is coming. So I like to trade dojis. Or if you see this kind of double top forming on the 5-minute chart, then you can get in anywhere, you know, after this bearish engulfing candle off of this double top. Could have been a good entry, again, below the 200 moving average. The beauty of this is that on the 5-minute time frames, you can really find where you want to enter. Whatever entry trigger you like. If it's an engulfing candle, is it a candlestick pattern? Is it a 3 candle pattern, a single candle that you like? Do you like a hammer? Do you like an evening star? Do you like a 3-line strike? You know, I've found myself trading a lot of 3-line strikes recently because they tend to be really powerful trend busters. So I would enter here. Actually, I'm not going to lie to you. I probably wouldn't be patient enough. I probably would have entered here right after this bearish engulfing. Give yourself a little bit room on a stop loss. Let's go say 1.25%. And we're going to go down to the bottom of the Fibonacci retrace here. It's a 4% move with 3.3 to 1 risk to reward ratio. And this one would have taken a while on Bitcoin, but it happens. And you get your win there. Go back to the 30-minute time frame. And this, a 4% trade on Bitcoin, does not happen often, not on a small time frame. I mean, it took 8 hours, but that's not a bad day for a Bitcoin trade to be at 4% in 8 hours. So guys, that's it for the video. I really hope you enjoyed this. I really hope you found this strategy helpful. There are a couple rules, and then there's a little bit of wiggle room that you have for yourself. Have to have the Fibonacci retrace at least to the 382. Have to have a bearish divergence. You have to break the 21 on a retrace, and those are your rules. That's what you have to have. The entry point is on your preference. So with that being said, guys, again, I hope you guys can use this method and make a lot of money doing it. And as always, until next time, peace.